Electric vehicle EV companies are on a boom recently as the world moves towards a greener future. If you're an investor wondering which EV company to invest in, you've clicked the right video. We show you every electric vehicle company you can invest in right now. But before we dive right in, do give us a thumbs up, subscribe to our channel, and press the bell icon for notifications. Tesla, TSLA. For a lot of investors, Tesla, TSLA is the definition of electric vehicles, EV. Now, of course, there are other amazing EV manufacturers too, but nothing compares to Tesla cars' popularity and performance. Tesla turned electric vehicles cool, thanks to its charismatic CEO, Elon Musk. For the majority of its existence, TSLA stock has been expensive by most conventional valuation measures. It is currently valued at 10.7 times the annual revenue. To place that in context, Apple, one of the highest margin hardware companies in history, is valued at just 6 times revenue, whereas other automakers are valued at less than 0.5 times sales. If you slice the figures a little differently, Tesla might sell about 500,000 cars this year. Investors are spending more than $556,000 per car sold at Tesla's current market cap. Tesla is simply not valued as an automotive company by investors. They value it as though it were a high-flying engineering startup. Given the company's leadership in battery technologies and automated vehicles, this could be fair. Tesla, on the other hand, is exorbitant even by software stock norms. With the prospect of Tesla stock being included in the S&P 500, TSLA may quickly gain institutional respectability. Li Auto. Li Auto is attempting to control one of the most lucrative segments of the world's biggest automobile industry. The business should be on your radar only for that purpose. One of the fastest growing segments of the Chinese car industry is Li's luxury electric SUVs. It stands out by providing features such as an onboard fuel generator that supplements the battery and extends the range. That's a huge deal in China, where EV revenues are outpacing charging infrastructure. And it helps the business sell outside of cities where charging stations are scarce. The business currently sells just one product, but analysts predict that from 2022 to 2024, it will release one new model each year. That would offer it a wide range of SUVs to choose from full-size to compact premium, and help it contend more effectively with other automakers vying for market share. Li stock has risen almost 80% since its IPO last year, and it now trades at a lofty 90 times earnings. However, the firm is well positioned to easily reach the valuation. In 2020, Li produced 32,624 cars, but has the infrastructure in place to increase its production to 500,000 vehicles a year by 2025. Li already has a management team that is acquainted with U.S. public markets. The company's founder and CEO, Li Zhang, who owns around 20% of the outstanding stock, is well aligned with its shareholders. Given the valuation and Li's comparatively limited number of vehicles delivered, the stock is not without danger. However, there is a lot of promise. This is a business that has the potential to stay in the fast lane for a long time.
早上好。
早，Nomi。
NIO. NIO is a Chinese electric car manufacturer and has multiple factors that make it interesting. To begin with, China has a much smaller domestic energy market and yet imports the majority of its fossil fuels. This provides much more of an impetus for the world to reduce oil imports by encouraging the use of electric vehicles. And furthermore, China's air quality is poor in most towns, and switching the country's car fleet from fossil fuels to electric cars will significantly improve the situation. Before the COVID-19 epidemic wreaked havoc on China's economy late last year, the Chinese government was proposing to require 60% of all car purchases in China to be electric cars by 2035.
播放上一首歌。没问题。 声音大一些。
Investing in NIO, which is China's electric car giant, is a way to invest in a greener China. Investors have taken note, as the stock has risen 230% in the last year. Still, once again, you'll need to be cautious. NIO has a lot of loans, and Chinese stocks don't have the highest image for safe accounting. It has an absurdly high debt-to-equity ratio of 9.3. Valuation is, unsurprisingly, a difficult task. Given no significant shifts in volume profit forecasts, the current share price represents over-optimism, writes Goldman Sachs analyst Fei Fang, who recently downgraded NIO shares to sell. The NIO stock will once again decouple from gravity. Only time will say if this is so. However, you certainly don't want to put your money into a stock like this.
Acromodo. We build rides. Light, electric,
ultra-efficient rides that are outrageously fun to drive.
Acromodo. Acromodo is grouped together with the other electric car manufacturers, although this isn't the most accurate comparison. Acromodo makes and sells three-wheeled EV cars, such as the Fun Utility Vehicle, FUV, on which the company's stock ticker symbol is based. These vibrant cars can be small and unconventional, but they're road legal and worthy of doing daily tasks, including driving and errands. The rapid responder model for the ambulance, defense, and law enforcement services, as well as the Deliverator for goods distribution, are both available from the organization. The fact that Acromodo isn't specifically dealing with Elon Musk and Tesla, which deal in more conventional car categories, is perhaps the most appealing aspect of its plot. FUV securities, like the majority of the EV stocks on this page, are quite bubbly.
Powered by a community of stakeholders with whom we share a vision of sustainable transportation, clean skies, and a future that's a whole lot more fun.
From its March lows, the stock has risen by 480%. Using their ticker FUV, Acromodo discovered that the company currently has 5 analysts following it. The analyst consensus is for a buy ranking. The range between the high and low gold prices is between 19 and 3.5, giving us an average target price of 11.1. With the stock's previous closing of 13.35, this means the stock has a possible downside of negative 16.9%. The 50-day moving average is now 17.49, while the 200-day moving average is now 14.22. The company's market capitalization is $503 million. General Motors. GM has been gradually but steadily increasing the pressure on both old and modern electric car vehicle rivals. GM revealed in March 2020 that it will invest more than $20 billion in creating automated vehicle and electric vehicle technologies by 2025, and that it will sell 20 new electric cars by 2023. In November, GM announced that it will increase its spending to $27 billion and release 30 new global electric vehicles by 2025, with a target of 1 million EV purchases by the mid-2020s. The most significant announcement made by GM was the unveiling of its latest Ultium battery at CES 2021 in January, a battery capable of powering an electric vehicle for 500 to 600 miles on a single charge. GM has made it known that it intends to drive the electric vehicle movement, and it is spending aggressively to do so.
The climate crisis is disrupting our way of life, and transportation is producing a quarter of the world's climate-changing emissions.
Quantum space. This is one of those situations where the stock appears to be costly, and it might be. The cost appears to be high, and they are, but the opportunity appears to be enormous, and it is. Quantum Space has been focusing on solid-state batteries for years, a holy grail device that the company has been struggling to commercialize for decades. It also has the potential to crack a complicated puzzle. Simply stated, solid-state batteries have the potential to be more energy efficient, lighter in weight, cheaper, faster to recharge, and less vulnerable to fires than existing lithium-ion batteries. A powerful solid-state battery that could be widely manufactured at a fair cost will be a significant step forward for electric cars. In December, Quantum Space announced the creation of a new versatile ceramic substance that tends to perform well as a solid-state battery separator.
I can't wait to tell the world more.
Quantum Space believes its batteries will be ready for shipment by 2024, and it already has one major customer, Volkswagen, OTC VW-AGY, which has invested $300 million and counting in the business. If Quantum Space's technology is effective, it could become a big supplier to the world's automakers at a critical time in the move to electric cars. That's the huge promise, but there are also risks. Quantum Space's invention may fail, take longer to market than predicted, or be beaten to market by one of the many well-funded competitors. Quantum Space, on the other hand, has the team, analysts, partners, and the technologies to make it a champion. It's a bold gamble, but if you believe in electric vehicles' capacity, the reward may be enormous.
Something that moves us all forward
and holds nothing back.
Ford Motors. Ford recently released a mixed fourth quarter performance report. Though adjusted earnings per share of 34 cents exceeded analyst estimates and represented a significant increase over the same period last year, automotive sales of $33.2 billion were smaller than anticipated. But due to the highlight of the launch, Ford is double its expenditures on electric vehicles, Wall Street was highly forgiving. Ford has previously pledged $11 billion to improve electric car technologies between 2018 and 2022. But in its earnings statement, the firm said it would increase its commitment by another $11.5 billion, increasing its cumulative EV investment to $22 billion between now and 2025. Ford started making its first all-electric Mustang this year, and in the years ahead, plan to see a number of electric Fords on the lot. And that's all for today's video on every EV company you can invest in. Did we miss out on a company that you think is worth investing in? Let us know in the comments section down below. And before you go, make sure you like the video, subscribe to our channel, and press the bell icon for notifications. Thanks so much for watching, and we'll see you next time.